I think what we are is very close to first movers in a lot of situations. We're sort of mercurial as well because we will change and go with whatever seems to be working best. When we sold the DPM, the designated primary market maker or specialist, when we sold that business, we didn't really have much choice. We knew the whole world was going towards high frequency trading. It wasn't what it is now, but it was going towards that. And you either had to commit tens of millions of dollars to IT spend, as well as connections, hiring a bunch of engineers and all the rest, which is what everybody else did. You know, that's what Citadel did and does. DRW did and does.
Yep.
You know, Jump Trading, Virtu, all those guys. They were building that stuff at the time. We'd be trading and we would see much faster than we could trade trades come at us electronically. They'd pop up on this or populate on the screen. You know, they're basically hitting you so fast that you can lose more money in half a second than you can make in a month. So if anything about what we were doing was wrong, they would pick us off, as you know the phrase, like that.
Any ARB opportunity, they would just wipe it right off the screen. If you were offering or bidding something that was out of line, you were either wearing it, shorted, or whatever.
And you were taking it from a situation, again, back to what you did as well, Tony, when all the orders are coming in by phone. Some are coming in onto a teletype and then being carried out. You can imagine those orders are taking 30 seconds to a minute to get out there, to cancel them, to get a response back. All of a sudden you get to where it's popping up on a computer terminal and it's saying, buy this, buy that, buy this, buy that, sell this, sell that. They're able to drive those bids and offers to you faster than you can respond. And then you take it to the next level where they basically say, we don't need these 7,000 traders in Chicago. We just need to let the bids and offers hit in the data center in the basement or in Mahwah, New Jersey or Carteret, New Jersey. We'll let these orders interface with each other. That's high frequency. And again, you need tens of millions just to put down, you know, the opening, just to basically match what those guys are doing. And that doesn't mean you're going to be successful because they're continuing to develop AI. It was a no-brainer. We had to sell. Luckily, we did to Citadel and Ken Griffith's firm. Then we started developing things that we'd already had, like HeatSeeker, because we sold the floor trading operation. Every one of our guys but one got a job with Citadel when we sold it. The only reason he didn't was he wouldn't take the drug test.
There's a shocker.
So you sold the business to Citadel, who is a very high-profile firm nowadays.
Was then too.
Yeah, that's true. That's true.
He came on the scene, and I'm
Tell
telling
me
you
more
what.
about it. What was it like working with them? What was it like interacting?
You suddenly realize that you are meeting, you know, in our eyes, the devil. And I say that not in a negative way towards them, although it sounds like that. But I mean, they were what's crushing what was happening. I mean, one of the biggest things that pushed us off the floor and into the world to actually sell our firm was the margins. I mean, the good and bad of electronic trading is it makes the markets that much tighter, which is great for the rest of the world, not so good for a guy who's in the industry of trying to take that money in between, right? When you eliminate that and it gets tighter and tighter and tighter and the margins are getting to the point where our overheads, we've got insurance, we've got this trading leases, all the things that we've got, it was impossible. We could make what most people would consider incredible amounts of money per month and still lose money because the overhead aspect of it and the lack of any margin at all for us to make money. So that really sort of pushed us in that direction. Now, that's the good thing for the public. The bad thing is what we've seen over the last couple of years with algorithmic trading, where we've seen these moves where an algo is programmed to be able to hit a stock or the entire market, and we watch moves that are 700 or 800 or 1,000 point moves in single days. So there's the good and the bad side of this whole thing. I will tell you this, first time I ever walked into the offices of Citadel, I was absolutely blown away with everything. The technology of the offices, the technology of the people within the offices, of what they had that we had no clue on relative to what they were doing.
It was like a time machine for you,
Yeah,
right?
it's like we saw, and I'll tell you what, there's probably no other aspect of business that I can think of that went through the changes of the stock market, options market, derivatives market, all that, as fast as we did. I mean, we literally went from here to here so fast. It's pretty incredible, actually. And to see where we are now. And you know what? Here's the good news. In the options market, because of what we did, and it was all manual, it was paper. I mean, I literally used to stand there, you write your things and you throw them to your clerk, and this is how you traded. You know, you're writing them down. Sell, buy, you know, all that kind of crazy stuff and all the numbers and everything else. We could only trade so many options in a day. You know, eventually later on, that I've brought up many times on television and in talks to people is, if you look at where the volumes were when we were there and how they've changed now in terms of just this incredible growth, and in 2018, record by over 3 million per day, record. So I think the biggest volume year we'd ever had was averaging about 18 million a day. And this past year, we were averaged about 21 million a day. That's a lot to do with electronic trading. That never could have happened, I think, in the old world.
Just the pure shortcoming of having human traders run the operation, right? It just wasn't possible.
And it's also, when you're going against a Citadel or DRW or any of those firms, you have no idea how big they are unless you know somebody at the firm. I mean, Ken had taken over the tower from Jamie Dimon, because Jamie Dimon was Bank One. So the Bank One tower in Chicago, when basically Harrison, I think, was the CEO of JP Morgan at the time, he brings Jamie in, and it was only a matter of moments before Jamie got picked to be the CEO over Harrison. Jamie leaves, he goes to New York. I knew him because our kids went to the same school in Chicago. All of a sudden, this building is filling up floor by floor. It's like a 40-story building, and almost every floor is Citadel. And no one knew who they were. And again, if you don't know who works there, A, you're never going to get into the building. B, you're never going to even get up to where their traders are and things like that, let alone the data centers and all that. And it's anonymous. We're just getting hit with this stuff on the floor, but there's no name to it. Everybody else, when Goldman comes in, you know it. Morgan Stanley, Credit Suisse, Deutsche Bank, anybody, when they come in, you know it because they're coming through that broker. With Citadel and these other guys, it's all just zeros and ones that are just streaming at you as fast as possible.
It's an electronic vampire squid.
Ken was Batman.
Yeah, exactly. That's
He really
the way it
was.
went. So tell me how you segued. You've now parted with your business and you're starting from scratch. What did you do when you started from scratch, and what did you look to accomplish from there? What was your first product?
The good news was that we went from like 60 some odd traders and support staff to 2. Because like I say, everybody got a job that wanted one with Citadel. Pete and I just were trading on our own then collectively for us, the 2 of us. We continued to use this heat seeker algorithm that we developed, which is really, how we follow the smart money. I mean, we knew it worked in 2001. Before we sold the firm to Citadel, we knew this was working because we'd get run over, just as you remember. By run over, of course, I mean that you just have a buyer that is relentless. They're just coming in. You
don't know why.
And 10 minutes later, whatever the news is that was driving that buyer is on the tape and it's public. And you're like, oh my God, and now you're chasing, trying to get this stuff back. We knew there were smarter people than us. We knew there were people that had tens of millions of dollars in commissions that they could pay for the best information on the street. Because we all know that's how you get that upgrade from Cowen, Goldman, Citigroup, whomever. You get that upgrade. You might even get that the analyst is leaning towards upgrading that stock the day before. Anybody watching understands that there are folks that get better information and get it faster. And if you can act on tomorrow's news today, you can make a lot of money, absent any other catalyst being in the market. Now, sometimes some of these trades are insider. That was the case in 9/11. 9/11, we saw a huge buying of puts in American Airlines, United Airlines, 3 days before the towers went down. It was like, we thought, is somebody downgrading the airlines on Monday or Tuesday? Because they're buying short-term, relatively short-term puts that are right at the money. And something at the money, of course, is going to react instantly to whatever news there is. People were selling them. Luckily, we weren't. But we saw this paper, and then, of course, when the towers come down, American and United drop to $15.
And you guys
These options that they're paying $1 or $2 for go to 15, like that. And we don't trade for a week. So these guys are probably trading out of it on stock anywhere around the world that was still open when the U.S. was shut.
Wow, that's a staggering story. Staggering story. So now you got the heat-seeking product, right? What led you to Options Monster and then, Options Monster and then Trading Monster?
Yeah.
What was that segue like? You just kept going and
Well,
and
the
digging
Option
in?
Monster idea was, hey, look, we've always felt, and we still feel to this day, that there's not enough education out there about the derivatives world. Everybody's afraid of it. And because we're option traders, we used to be looked at, I don't think as much anymore, but to some degree probably, that you're always the crazy guy. You're the guy with the ungodly amounts of risk on and all the rest of that because, oh my goodness, you're long and short these calls and puts and all this kind of stuff. And people just don't understand it. And I think their lack of understanding was something that we wanted to get out there. So we, as part of Option Monster, we started education. And on top of that, we decided, you know what, this is really cool what we're seeing here through the Heat Seeker. We thought that other people would want to see what we're seeing. And so we started that side of the business as well. And that morphed into the whole Trade Monster thing because with Trade Monster, we felt like the markets were not really adequately getting the execution systems that we would want. And we thought other people would want. So the one thing we did uniquely versus I think everybody else was, Jon and I being former traders, would probably have the understanding of what's the best way to configure something and create something to be able to trade in the derivatives world that would make sense, as opposed to some of the old line. And let's be honest, most of the major firms don't want everybody trading derivatives. They find it too complex. Most of their, these guys, they've gone through Series 7 and all the rest of it, but I don't think that they really, they absolutely have tried to hold people back, still to this day, from trading derivatives if they can. So we decided to build this, and we did, and I think that people immediately said, wow, that makes sense. And with that, we gave them all kinds of different strategies that you can use that would make it a one-stop shop, one click, boom, and you could put on a position that you wanted to put on.
So you guys were first movers into sort of identifying the smart money flow, creating a system to educate people as to what that meant, leading them into the trade, and sort of completing the whole round turn of how to analyze and manage that risk.
Yep.
Okay, so you're making sort of, you're helping make derivatives a little bit more of a household name and a friendly item.
Right.